Wednesday, December 21st, 2022, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at how the last time the Japanese yen was in a bull market and strengthened massively, we had the great financial crisis of 07, 08, 09. And we're going to look at the yen, Japanese yen carry trade and why that is so important for the health of the global financial system, not just the Japanese one. So before we go further, we're going to look at some of the questions from last week. We're going to go through 3 questions today. We're going to start with question number 7. And this is from Alisher Jukanoi. And it's from the currency reset will wipe out creditors and usher in CBDCs, part 2. So Putin already announced that BRICS currency will be backed by commodities and gold. If USA wants to buy anything from BRICS, why would anyone accept CBDC of USA backed by debt? Or do you expect USA CBDC will be backed by commodities and gold as well? Debt wiped away or restructured. All assets take huge price cut. In that case, how will stock market be repriced? Thank you. Well, we're seeing already that the BRICS nations and others in the what's called the Global South are already dealing with each other in their own currencies. And if they're backed by commodities and gold, they'll keep doing that. What about the dollar? Well, I think if there is a CBDC, and it looks like there will be one, it will be just a kind of a mechanism to transfer value like we have today. It's just another digital form of the US dollar. As to whether they would accept US dollars, it depends. If the dollar can remain relatively strong against the BRICS CBDCs, maybe. But if not, then yes, the USA, and not just the US, but the other countries that are in the dollar system would have to rethink things. As per the stock market, well, whenever there are resets, especially versus gold, we see the stock market dropping in relative terms versus gold. In 1980, we had the Dow Gold ratio drop down to 1. I think the same thing happened, similar thing happened back in the early 30s. The Dow Gold ratio went down to 2. So, yeah, that's what I expect from that. This is from BCA Smith. It's from the video, Hyperinflation Comes Like a Thief in the Night. Mario, the prices are definitely not coming down. Question, like hyperinflation in Weimar, Argentina, Venezuela, Zimbabwe, Turkey, and Lebanon, and others, will the UK hyperinflation be worse? It's difficult to say, but it depends a lot on the government and also the Bank of England. If the government slows down their deficit spending and the Bank of England tightens policy strongly, not what they're doing now, because we have prices rising at double digits and rates are still like at 3.5%, and they're talking already about stopping to raise rates. So if they do that, yeah, we could see it, but we'll have to wait and see. It's all about the public confidence in the currency, I would say. Last question for the day is from the same video, Hyperinflation Comes Like a Thief in the Night. From Frank Murphy, I would like to pose a question to you as follows. I have heard many experts state that when the entirety of the investment cake on a global level is added up, that the portion relating to gold is a mere 0.5%. My question is to the effect that when this statistic is quoted, are these commentators referring exclusively to paper gold actual gold or cumulative or both. Thanking you, Frank Murphy. Yeah, I think they're actually referring to the whole precious metal space, gold, silver, and also the mining space. So yeah, 0.5% of all investable assets. That's what I think they're referring to. Yeah, and they're referring to GLD and SLV as well, I think, because they're supposedly technically backed by gold. So back to the Japanese yen. Of course, yesterday was a huge surprise from the Bank of Japan. They basically lost their battle with that peg at 0.25 for the JGB for the 10-year. And a lot of you have a lot of questions. And I think the most important thing to talk about today is the yen carry trade and how the last time the yen was in a bull market versus the dollar, we had a lot of trouble in the system, and it's to do with the yen carry trade. So what is the yen carry trade? Well, it's very simple. Let's say you take out a mortgage and you borrow in a currency that's depreciating, like all our currencies, right? In 5, 10 years, 20 years time, with a lot of inflation in that currency depreciating, your debt will be worth a lot less. The value of your property is going to stay pretty stable or even go up as it has in the last 10, 20 years. I know there have been crises in between. So this is pretty much what the yen carry trade is. Global investors have been using that strategy with the Japanese yen for the last 2 decades or so, maybe even a little longer, because the Japanese have kept interest rates artificially low and they've kept a weak currency most of the time, trying to get Japan out of their 3 lost decades now of economic stagnation. So the way it works in the foreign exchange market, when you sell a currency, you're borrowing it. So you sell the yen and you borrow, let's say, at almost zero. And for that, you get dollars. And the dollars are returning more, of course. So with those dollars, you buy assets that return more. And as the Japanese yen weakens, you're doing okay. You're doing very well, actually, because your financing costs are low. And so your liability also is falling because the yen's falling and your assets are going up in value. And as you can see here, this really kicked off in around 2013, end of 2012, beginning of 2013, under Prime Minister Abe. And it was called Abenomics because, as you can see here, from like June 2007 to around January 2012, the dollar dropped from like about 125 all the way below 80 versus the yen. That was the lowest the dollar had been ever against the yen. So that's why we had the financial crisis there, because there was not as much liquidity in the market, I would say. The yen was strengthening. People had to unwind their carry trades, because when you borrow in a currency and you expect it to lose value, that's fine. But if it reverses and starts gaining value, you have to close out those carry trades. And if you're financing your carry trade, let's say at 0.25, like you were able to do until yesterday, but then the peg goes to 0.5. And some of you said, well, that's nothing from a quarter to a half. But if you're financing at a quarter, if it goes up to a half, your borrowing costs double overnight. And you have to close out all your carry trades. And that affects the whole investment world, not just in Japan. And the other thing about Japan that I wanted to show you, Japan is one of the biggest creditors in the world. Well, and as you can see here, Japan holds the most treasuries as per the U.S. Treasury data, the latest, October, over 1 trillion treasuries, as you can see. And of course, it has gone down since the beginning of the year. Japan is gotten rid of almost 300 billion treasuries, as you can see. And the other thing about Japanese financial system, is that they have the largest pension fund in the world, the Japanese Government Pension Investment Fund, 1.7 trillion. So what the carry trade did as well on the Japanese domestic side, and the low interest rates that the Bank of Japan has kept for decades, is make Japanese investors go abroad for yield. So they would be buying U.S. treasuries, European government bonds, gilts, whatever, to get a better return. And it was a good trade while the yen weakened as well for them. But now that everything's turning, yes, that's why it's so dangerous. That's why we could have a big accident. I'm not saying it's going to be right away, but you saw what happened the last time the yen strengthened from 2007 to 2012. We had the biggest financial crisis, well, of the century, I would argue, or of the last 100 years. I think it was probably even worse than 1929. So you can see why it's so important for the yen to remain relatively weak or neutral. And ever since the Abenomics started, as you can see here, the yen has been on a downward trend, or the dollar has been on an upward trend. And now, as you can see, it looks like we've topped. And this is quite dangerous, I would say. And why would gold and silver benefit from it? We saw yesterday gold and silver benefited. Well, because if you look at when the dollar was dropping versus the yen from 2007 to 2012, 2011, well, the price of gold went to an all-time high. I'll show you a shorter term chart of the Japanese yen, or the dollar versus the yen. As you can see, it looks like we've clearly topped in the dollar. Basically, what Japan has been doing since Abenomics is carrying the world through their savings, helping the liquidity. And now it looks like Japan said, well, that's enough for now. Our currency was dropping too quickly. We're starting to have problems, especially with energy prices rising so much in dollars. Seeing that Japan is almost 100% dependent, I think, on imported energy. So now let's quickly look at where the markets are this morning. It's 8:30 a.m. London time. We've got spot gold at $14.70. It's down about $3. High's been $18.20, and the low has been $18.11.70. So I think in terms of trading, and of course, some of you might trade gold. I don't. I would say 1825 is the key level that we need to break above and stay and close above. Silver is down overnight. It's down 26 cents at 23.88. It's down 1%. We're right near the lows. The high's been 24.30. So in silver, the key level I think is 24.15. We need to stay above that level and hopefully also close the week above those levels, both in gold and silver. The Dow futures is up 115 or 1/3%. NASDAQ is up 34 or 0.3. S&P is up 10 points or 1/4% as well. To the currencies, sterling is down 1/4 at 121.50. The dollar, the euro is unchanged, 106.20. The dollar is unchanged versus the yen today, 131.78. And the dollar is up 1/4 versus the yuan at 697.60. To the other currencies, we got the Aussie dollar unchanged, 66.75. Dollars unchanged versus the loonie, 136.14. And the Kiwi dollar actually is down almost 1% at 62.91. To the general commodities, we'll start with platinum. Platinum is dropped just below 1,000. It's down $11. It's at, just below 1,000, around 999 platinum. We'll have a look at WTI crude. That's unchanged, 76.24. Brent crude is up slightly, just above 80. High-grade copper is up 0.2 at 380.50. U.S. nat gas is up 4% at 546. The Dutch TTF nat gas futures, while that's down 7% and it's back below 100, it looks like for this market, the EU is trying to cap it. I saw that Goldman Sachs yesterday said that capping this futures or this gas price could actually backfire and create shortages, and I agree with them. Governments have tried for thousands of years to do that, and the usual consequences, shortages. Let's quickly go through the bond markets. The Japanese 10-year yield, it's traded up to 0.486 today. So a couple of days ago, it was at 0.25. So they're going to try to keep it now below 0.5, I would say. How long can they do that for? We'll have to wait and see. UK gilt yields have been rising, and I think that's worrying for the government and the Bank of England. Right now, the 10-year is up 4 basis points at 364. The 2-year as well, which is a reference rate for 2-year swaps and mortgages, that's up almost back up to 4%. It's at 370. And the 30-year is almost back up to 4 as well. It's up 5 basis points at 394. And to finish off with the U.S. Treasury market, 10-year yield is unchanged at around 369. So there you go. With that, I wish you all a great day. Take care. Bye.